Ladies and gentlemen, welcome to Entrepreneurial Finance, typical characteristics of venture capitalists. What are venture capitalists about? How do they deal with entrepreneurs? How they behave and so on. Let's start with a couple quotes. Jeffrey Glass from Bain Capital says, "A man without a plan is not a man." Is this really important in entrepreneurship, having a plan? Well, there's people who doubt that. However, if you approach a venture capitalist, you always need to have a plan. Is this worth anything? Questionable. Well, whatever. The next is, regret for the things we have done can be tempered by time. Regret for what we have not done is inconsolable. So you should always think about what you not do. This is what this quote is about. And if you look at another quote, if everyone else is excited about it, I'm probably not. From Jeremy Levine from Bessner Venture Capital. This is interesting quotes on venture capital. And probably this is a chapter venture capitalists shouldn't look at, but entrepreneurs might look at more closely. Because it gives some impressions on venture capital which are out there, which might not be all true, but it is what people say, what people think, and also what theory tells you about venture capital. So let's start with some empirical facts on venture capital, which you can really look at in theory. First of all, how do venture capitalists invest? Well, they always want to see the management team, the founders. They want to talk to the founders. They mainly invest in people. They also invest to some extent in ideas, but mainly invest in people. Because the idea might change, the people ideally remain the same. Financial criteria in the first moment appear to be less important. At least it is not important to come up with big spreadsheets. It's important to come up with an understanding of the business model. That's more important than a spreadsheet. Showing an exit mechanism might be important. Showing a number, which might be the exit value, is probably just guessing. So don't do that. In selecting, and this is an investment, this is very important, venture capitalists place greatest emphasis on the entrepreneur. So it's you, the entrepreneur. And it's probably, that's what some people say, it's the first 30 seconds or 3 minutes you meet the venture partners, which are the most important. And this is empirical evidence on venture capital, and there's more empirical evidence on venture capital, which you can see on this slide. For example, market criteria hardly differ in the various phases. So venture capitalists love to invest into markets in early and later stage. So if they invest in seed, startup growth, it's always the market which is important. Critical factors in seed phase, in early stages, are mostly related to the entrepreneur and what he's able to do, especially being able to manage risk, and not really the product itself. The product is also of importance, but the entrepreneur a lot more. And in later stages, you can see, for example, in expansion, the acceptance of a product play a bigger role. This is all empirical evidence on how venture capital works. However, there is more to that. And if you look at, for example, Chris Dixon as a venture capitalist, and the entrepreneur Drew Houston, Chris Dixon from Andreessen Horowitz didn't invest into Dropbox. And you might say that was a mistake. However, we have to be honest, it is very difficult to see that a company is going to be successful if you face this big uncertainty. If you face an entrepreneur, and this is what is at least is being told, that Chris Dixon wasn't totally convinced about Drew Houston as an entrepreneur, and this is why he didn't invest. That was the reasoning, at least, which is out there. Is this the truth? Nobody knows. Probably there is a lot of truth to that, especially if you look at the fact that venture capitalists invest into people, not so much into the product. People as the most important criteria. However, in the process, it's very important also to understand the venture capitalist, and this is the so-called top 9 or top 10 lies of venture capitalists by Kawasaki from his blog. Because what always happens is a venture capitalist probably won't give you a no in the process. Because, and you remember the quote from the very beginning, the things you don't do are never excusable. They don't want to tell you we didn't do that. And this is why they tell you, I like your companies, but my partners didn't. So they don't have to say no. It's just the partners. They tell you, if you get a lead, we will follow. This is, we don't say no to you, we'll just follow to someone else. Show us some traction and we will invest, meaning a no, but they don't give you a no. We love to co-invest with other VCs, which is basically the other thing over there. And this is also a no, but they don't tell you no. We're investing in your team. We are not investing in your idea. That's what it means. And this is again not a no, but this is what they tell you. I have lots of bandwidth to dedicate to your company. Means I love your company so much. We still don't invest. This is a vanilla term sheet. This is what they tell you, giving you a term sheet which you don't want to sign, which is basically also a no. We can open up doors for you at our client companies. This is, to some extent, what they tell you before they invest. However, later on, is this really the truth? We like early stage investing. That's what venture capitalists might sometimes say. But in the end, they don't want any risk. They want the technology which is working, the market who has also already an acceptance. So typical quotes by venture capitalists, which also tells you about the other side of venture capitalists. Venture capitalists won't be honest to you always, because the main thing they don't want to give you is a no to your investment. Because nobody wants to blame them for saying no to a company which now is very, very successful. This is at least what Guy Kawasaki says. It might not be true for everyone, but Guy Kawasaki is a very experienced investor, so it has some truth, I guess. And if you remember the quotes from the very beginning, what you've seen, Bessemer Venture Capital, if others like it, I probably don't. This is the only exception in the market. They have a so-called anti-portfolios. Bessemer Venture Capital Partners, they publish an anti-portfolio on the internet, and they tell you about the companies they didn't invest in. They tell you we didn't invest in FedEx, in Intel, in Google, in eBay, in PayPal. Also right now, in retrospective, we can say great investments. They, for example, said a 40 million valuation for Apple. I think it was 40 million. Outrageously expensive. If you look at the share price today, valuation for company, 480 billion. 40 million doesn't look too expensive. However, these are the only ones in the market who tell you these are companies we said no to. You won't get it from other venture capitalists. And this is why the process of investing, looking at the process, is very important, because in this process you can do lots of things right and a couple of things wrong.